Good afternoon. George Cavaligos for HFT Bonds. Well, we got a little bit of a bounce last night, but not much. And, when the markets are trending, it often falls short of hitting upside objectives in a bear move, and conversely falls short of hitting downside objectives in a bull move. We didn't get much of a bounce, and the markets went for sale pretty much out of the gate as soon as the states came in. It was interesting that the short end led the way down this morning with heavy selling in the 2-year note and the 5-year note early this morning, prompted, I guess, by the announcement that the government the administration was going to nominate Stanley Fischer to be the Fed vice chairman. Supposedly, Mr. Fischer is not a big fan of this forward guidance idea, which makes sense. He says because the Fed can't tell what the economy is going to be doing 2 years down the road. So the idea that we had kicked around before that, the Fed was going to start the taper and they were going to extend their forward guidance. The idea that the Fed won't be raising rates, which I think currently we're looking at 2015 is from what the Fed members have stated. They were going to push that out to 2016 and basically give the holders of the 2-year note a free, put on holding 2 years. Still kind of an attractive idea, I guess, in the longer run once this stuff settles down and we hear some more comments from Mr. Fischer and Ms. Yellen in the new year. But it's going to take some time to digest this idea that the forward guidance may not be extended the way that the Fed had stated previously because of this appointment of Mr. Fischer. So be careful buying the short end. Be careful buying anything in the treasuries right now. Bonds are closing. Well, they're not closing. The pit just closed 10 minutes ago. Bonds are right near their lows of the day. Still think we got a better and even shot at checking out those old lows. What was it, 128.5 roughly, and maybe even 127.5. Into next week. We do have an interesting situation next week with the auctions too. 2-year, 5-year, 7-year, and a 5-year tips. So you're looking at buying a bunch of short-dated coupons in an environment where you don't have the forward guidance put anymore. So it's going to take some backing up to get some interest for those auctions, obviously, as we saw with the 10-year and 30-year auctions not going well. So keep an eye on those downside objectives. I would love to see a bounce into tomorrow. I'd love to take a look at today's highs in the bonds at 129.20 and around 124.17 on the 10-year for putting on some more swing type shorts going into next week. We might see a bounce tomorrow. The only data we have is the PPI number tomorrow. The only data out of Europe, I think, is their unemployment number. That's supposed to be unchanged at 0. So we'll see. Look to sell rallies, depending on how much of a rally we can get out of this. The market was interestingly catching bids in the long end of the curve today because of the the selling in the short end. I think people were unwinding those curve steepeners quite a bit, where they had bought the short end and sold the bonds and notes, and now they're reversing those trades quite a bit. Somebody told me actually that the spread between 10s and 30s, and I didn't look this up, I should have, but the spread between 10s and 30s is at its lowest yield difference in the last couple of years at this point today. So a little more flattening tomorrow, might get the bonds up, see that 129.20 level. And let's see if the notes can get back up to that 17 level. That might be an interesting area where you want to put some shorts on. So on the downside again, I had 129.03 as kind of an area to look for. Tomorrow we're going to be looking for 128.31, 30.31 on the downside in the bonds. And in the notes, we hit 124.03 plus today on the downside. Not much really to lean on between 124.03 plus and those lows from 123.24 going into next week. So, but then again, this curve stuff, you have to keep an eye on that. We talked about it this morning with the curve flattening. Said if you got any buy signals, you wanted to buy the bonds. If you got any sell signals, you wanted to sell the notes, and I think that'll work again tomorrow. It's going to take some time, more than just one day, to unwind some of these curve trades, and this idea that people were able to buy the 2-year note and not worry about it because you had the forward guidance put there to protect you. So keep an eye on that stuff. Should be an interesting couple days ahead of us here in the bond market. Have a great night, everybody.